Welcome back to Commodity Champions. We are now joined by Manish Singh, Chief Strategist and Head of Investments, Crossbridge Capital, joining us. Manish, hi, it's a pleasure to have you on the show. We've just discussed a whole host of impact that we have seen from the spat between US and China on various asset classes. But it just boils down to one thing on how long can this uncertainty really can go on. What is your sense? I mean, while you've been studying, reading about all of this, what does the analysis say? Is it going to be a full-fledged global trade war, or do you see it actually boiling down to a negotiation?
So I strongly believe that it won't be a full-fledged trade war, and these are all negotiating tactics which are welcome because clearly there is a huge trade balance in favor of China. I mean, China exported $500 billion of goods to US last year, and US exported only $130 billion. So I think that the concern of US is genuine. However, I would like to say that it's not something that US can just wish and they will get a trade balance. I think what US relies on, products from China, it's not something they can manufacture by themselves, and they rely on for a good number of reasons, because it can be produced cheaply, which US cannot, and the labor costs are much higher. So I think that what is likely going to be, there is going to be a negotiated solution, which will mean that China will have to open up its market to US, reduce tariff on cars which are high, US cars into China. That will be seen as a victory for Donald Trump, President Trump, to take to his voters and to his constituency, and for them to end up having some sort of a deal. Now, that may not be happening immediately, because, you know, what US has said, I mean, there's a 60-day consultation period on the tariff that they have imposed. China hasn't even put a date. So people might get over worried that it's going to happen tomorrow. No, it could take weeks and months, of how these things would evolve.
So what is your sense on how long can the global market sustain this kind of an uncertainty, the tit for tat, the retaliation that we've seen coming in, or would you really want to put a date to that?
So I would say that very soon people will get tired of this. I mean, that's my honest opinion. What's going on is that the initial reaction has been because people thought, oh, this is going to get imposed tomorrow or now or day after, and many people didn't even question that there was no date on it. So very soon market will get tired, and the news media will get tired of covering tit for tat every day that's happening. What is going to be important is that if there was a date put on it, then I think it will focus mind. But you also remember what Donald Trump said last night when he talked about increasing this tariff to another $100 billion. He said he's still open to negotiation. What does that tell you? That is not a language of a trade warrior, like he's looking to settle score or trying to benefit from it. He knows the reality that if you look at how well China is placed in manufacturing world, it manufactures 25% of global capacity that is manufactured in China. Over the years, they have honed the skills, and they have become better and better. It's not something that US can compete on. So I think if US thinks that they can get manufacturing jobs back into US, I don't think that really plays out, and they will very soon realize that the time to impose tariff was 10-15 years ago. That battle has already been lost. It's more about understanding the reality and coming to an adjustment, which means that China also opens part of the market and US is able to export more, but that's about it. That's where I think we are headed.
Manish, there has been a lot of protectionist measures, if not measures, definitely a lot of conversation, but would you see world being back to the same place after what we have seen in last week or 10 days? And also, how would you look at the WTO now? Because a lot of people have called WTO as a very redundant organization as we stand on that. In the light of what we have gone through, how do you look at the global trade from here on?
Yeah, so what I would say that, institutions like WTO, it has been working on, well for now. But, people on all sides have had complaint. US has filed many cases against China in WTO. China is using the same method that US has used, and now they have filed a complaint against the US tariff. Maybe, it's an organization that needs to be revised, and mandate needs to be reset. And for people to think that bring such an institution into the 21st century, where the world is far more global, far more interconnected, and some of the measures put on that, it just takes far longer to come to any resolution. President Trump has threatened that he might leave WTO. If US leaves WTO, then that's it. That's the end of WTO. But if you ask me, do we need a body that coordinates trades and sets standards and procedures and a resolution mechanism, a resolution body? Of course, we need that. So I would not say that institutions like WTO should just disappear. I think that will be very bad. I mean, there needs to be a coordination body. But just that, it has to be well represented, rules have to be well set, and it should function like a modern institution, which is leading with a very dynamically changing world.
I also want to talk to you about the various asset classes and the kind of impact, reaction, knee-jerk reaction, so as to say that we have seen across asset classes, whether it was equities, which was reacting to whatever China and US said. We've also seen the same thing happen for currencies, for commodities, for agro-commodities as well. The way the week has been, how would you summarize that, and how would you want to start getting back into trade Monday morning?
Yeah, so when I look at, where we are, so we'll have the US jobs report in half an hour, an hour's time now. We are going to have US earnings season starting in right earnest end of next week. I would say that these data are going to be turning point, because what is happening now that even if the analysts are predicting a good earnings report for Q1, market is not taking note of that, because everyone is just obsessed with what President Trump tweets and what he says about Amazon, says about the trade tariff. So in this world, where there is less positive news at this time, it just preys on everyone's mind that maybe things are too negative. I disagree with that notion. I think if you look at the global GDP growth and also growth in US, somewhere around 2.5%, going on 3%. In Europe, Eurozone is growing at 2%, and emerging market is growing very fairly. And Q1 earnings are expected to be better from what we have seen so far from the estimates. Then it doesn't make you feel bearish. I mean, I would rather see that you will see a turnaround in the market, because it will react to positive earnings. It will also take note that these tariffs are not going to be imposed this weekend or tomorrow. There is a timeline on it. And also take a note that there is a huge amount of negotiation which is going on. And most importantly, if you think about it, this tariff does not benefit anyone. It doesn't benefit China. It doesn't benefit US. So things like tariff and these things have to benefit someone for it to apply. I take you back to Reagan administration when they imposed 300 million of tariff on Japan. The reason they could get away with it, because Japan was a US protectorate, and it couldn't say, well, we are not going to take this tariff on. So it's very different. China is not a protectorate. China is the largest economy in terms of PPP, and certainly the biggest competitor and closest one to the US. So these are not 1970s, 1980s. You're talking about a supply chain which is global, which is very well interlinked. I mean, if you look at iPhone, which is manufactured in China and sold in the US or globally, half of the companies contributing to it is from China, half is from outside. So, I think one has to be very careful who are you putting tariff on. It could hurt non-Chinese companies more than China.
Oh, well, absolutely, and nobody really stands to earn from this. Manish, thank you so much for joining us. Well, that's the view coming in from Manish, saying that there is plenty positive to watch out for as we start the new week, and the markets perhaps could turn around for the positive here. Of course, the tariffs are not going to be imposed anytime soon. That's yet another relief that the markets would start the next week with. But that's all the time that we have on Commodity Champions this edition. Thank you so much for watching.